What's going on, everybody? This is Blockchain Bullz, and today I'm going to make a video about the do's and the don'ts investing in cryptocurrency. So this one's going to go under the crypto training videos. Like I said, full free course, basically giving it away for free. Some people charge for this kind of information, but it's a whole bunch of information for newbies or even people who've been in the market, where we kind of talk about the essentials to successful investing, and it's crypto training videos. You can get that on the homepage. This is one of those videos that's going to go into that area. So the do's and don'ts I've outlined here on this particular chart right here. Investing in digital assets. Why do I call it digital assets and not just cryptocurrency? Because you have NFTs and you have other things that are being developed in the cryptocurrency space aside from just currency, right? So it's more than just cryptocurrency. Bitcoin's a cryptocurrency, but would you call Ethereum a cryptocurrency? Or what would you call that? A smart contract developer platform? So we're going to go over timing, doing your own research, taking profits, build portfolio, main income, understanding markets, paying attention, approach, and mindset. And all of these are the do's and don'ts. There's tons of information out there on the internet on how to do investing in different asset classes, whether it be stocks, bonds, ETFs, mutual funds, cash equivalents, real estate, REITs, commodities. In this case, we're talking about digital assets. When this was written up by Wealthsimple, I don't think they talked about all of that in detail. Right now, I would say that precious metals and real estate are two asset classes that people really enjoy investing in when they're trying to store their wealth. Right now, the stock market has also been hot, but just when it comes to digital currency or cryptocurrencies, digital assets, whatever you want to call it, that's what we're going to dial in here. So I'm going to bounce in between some subjects here as we go over each line item. So the first thing we're going to talk about is timing. Do buy when on sale is the do, okay? So buy when it's on sale. This buy the dip thing didn't just come about because it's cliche. That's how you do it. So once you fundamentally understand something, timing is everything. So when you buy, this is going to change your whole mindset. If you get into the habit of buying on sale and not doing what you are not supposed to do, don't chase a massive pump, because that's what happens most commonly. People always want to chase the next big thing, and then they get caught in the pickle, and then it retraces, and then it comes back down. Ideally, you should have been in Bitcoin, investing in Bitcoin since 2019 and accumulating all the way up until late 2020 when it started to run. So if you were buying when everything was down, by the time it started running and pumping, you would have been in position, right? So instead, people get in, they buy the pump, and then they buy Cardano at $1.21, and then when it goes down to $1.05, they're like, sell. But the people who bought Cardano at 4 cents, they're like, hey, they're not even fazed by what Cardano's price is. Or the people who bought Bitcoin for $3,500 or even $12,000. There was a point in time when buying Bitcoin at $12,000 was considered a risky investment or too high. For those of you who've been following this channel or me in general for a long time, you know about the prices we've seen and the criticism that we've all received for buying Bitcoin at $12,000 or buying Cardano at 50 cents. People used to always say things. They still say it. I mean, they'll still call things overpriced, and they just don't have what we're going to get to later, which is patience. But obviously, no one has a crystal ball. That's a big thing right there. Don't think that all these YouTubers know what they're doing or have a crystal ball, because a lot of it is speculation, including me. It's just applying principles that work time and again. So this right here is really important, doing your own research. So empowering yourself to use Google, to use YouTube, to use Google Trends, to use these other tools that are available to you to helping you understand how to do research. So always do your own research, and don't just buy because someone else told you to. If you're getting information from someone, I love crowdsourcing. I love talking to other people and getting ideas from them, because that's how you find out about Bitcoin. But the thing is, you need to take it upon yourself to do the research. So I'm not saying don't listen to people. I'm saying that before you make that executive decision, chief executive officer of your own life, you're the CEO of your own life or your own family, before you make that decision, you have to decide whether or not that's a good decision for you. And at the end of the day, unless someone's got a gun to your head or someone's pushing you into doing something against your will, ultimately it comes down to you making that decision on your own, right? I mean, unfortunately, you can't blame anyone else for your own decisions because it ultimately comes down to your own free will. All right, so with that being said, understanding the difference between fundamental analysis and technical analysis. I primarily focus on the fundamentals way more than I focus on technicals. I will see chart analysts constantly going over charts of, we see this in the cycle, we see the support. Yeah, support levels and resistance, they're relevant, but when Bitcoin wants to dump, it'll break all forms of support. When Bitcoin wants to charge up, it'll break all forms of resistance when it's going up. So technical analysis is cute and cool, maybe 25% of it, but for the most part, I'm paying attention to the fundamentals. I'm looking at, is this project something that is relevant moving forward? Is this something that the industry needs? And then once it's that, then I need to know, does the team appear to be legit, or do they show signs of being a rug pull? Are they a little bit scammy? You know, you want to get to know the founders. That's really important. I don't think enough credence goes into the value of the actual project developer lead. Like, is this the next Bill Gates? Is this the next Mark Zuckerberg? Is this the next Jeff Bezos? Or is this the next Trevor Milton from Nikola? You know what I'm saying? So there's a great deal of emphasis that needs to go into it. Is it the next Vitalik? Is it the next CZ? Or is it the next rug pull that's out there and we've seen it as the next BitConnect, right? So that's where research comes in, researching the team, researching the project, and then also knowing what you're looking at. Again, watching that full tutorials on the homepage about all the crypto training videos. If you go through all of those, I mean, you go over that in 2 weeks. You know, keep going back to it over the span of 2 weeks, watching a video a day. You'll be a lot more well versed in a proper approach. Okay, so that's obviously not the final thing that you have to do on your end, but it's just one thing that'll get you more leveled up, right? Going from a level 1 to a level 2 or a level 4 to a level 5, depending on how high up there you want to look at it. And then we have to talk about taking profits. So do take profits from time to time, okay? Don't be worried about taking profits. And what goes side along with that is don't be greedy. If you're up 4, 5, 6, 7x, okay? If you invest in a project at 15 cents and it goes to $1.50, do you take profits? Do you take some profits? Do you take 25%? Do you take some chips off the board? Do you take your initial investment off the board? Or do you keep hoping and wishing that it goes to $10 and so and then all of a sudden it reaches $10 and then it crashes back down and you're like, wow, I should have just taken profits. So don't be greedy. I'm not saying sell everything all the time, but whenever you get a chance, when you're in a sweet position, don't be afraid to take some profits, because when the market corrects itself, you won't feel so bad, okay? I think all you guys can relate, especially if you've been in crypto long enough. I mean, if you've been in crypto since at least late 2020, you know what's going on with the profits. Build a portfolio. So what that means is do some strategic planning. So do you know how to strategic plan? What is your strategy? Do you have any plan? Don't forget to have a plan, okay? So building a portfolio, you need to have some sort of plan. Like, I'm a big fan of being flexible. Now, don't get me wrong. I'm not saying just be so stuck in a plan that you're not even flexible, but have at least some sort of long-term direction. Here's what I'm saying. If you know you're going from California to Florida, okay, you know long-term your end goal is Florida. Now, how you get there, whether you go through Natchez, Mississippi, Biloxi, or Birmingham, or Dallas, or Houston, or maybe San Antonio, or South Padre Island, who knows? Your route to getting to Florida might change, but ultimately you're headed east from California to Florida. You get it? So your road trip might change road paths, but at the end of the day, you know where you're going. And that's what I'm talking about with building a portfolio and having some sort of strategy. Not just going in there, for lack of a better phrase, peeing in the wind. Like, if you pee in the wind, what's going to happen? It's going to get all over your face. So you at least got to know, well, okay, let me take it one step further. Let me pee downwind. I mean, I'm just using that as an example because, you'd be surprised how many people might just pee in the wind because they didn't just think one step ahead. I know, common sense applies, but hey. Main income. do keep your day job. Don't get so frothy with the profit that you're like start telling your boss off and that you're ready to start moving on with your life and retire because the market's up. Don't get overly exuberant. Don't get overly cocky because the market's up. So do keep your day job and don't invest more than you can afford to lose. Don't overextend yourself. That's the big thing that I'm talking about with that. Okay, so understanding the markets. Now, obviously dependent upon the market, but in this case, digital assets, cryptocurrencies, digital currencies, whatever you want to call it, do read some books and study markets. There are a handful of books out there on Amazon Audible that you can read that will help you to understand markets. And if you take the time when you're driving in your car or when you're jogging or at the gym and you just listen to it on Audible, I mean, sometimes the words might just be going in one ear and out the other, but every once in a while you'll click on to a session and you'll hear it and then you'll understand more about market strategy. So don't neglect education and learning about investing. This is really important because this is going to be what's going to, it's like a tool belt, right? When you're on the job, some carpenters, they're like, I only need like 3 tools. I need a hammer. I need a certain type of hammer. They might say they might need a saw, and then they might need a drill, right? And those are the only 3 things a carpenter might say he needs. You give him those 3 things, he can do any job. Well, some people have more tools in the belt, but what's in your tool belt? And so every time you're accumulating knowledge, it's like adding a tool to your tool belt. So pay attention. Do watch the news and developments, okay? Don't be lazy with paying attention. So as the markets are going through things, maybe having a news app, a crypto tracker, or some sort of app on your phone that at least gives you some sort of information if Jerome Powell says something, Janet Yellen, so that when the market's going down, you know exactly what's going on, why it happened. So I'm not saying consume yourself with it because you don't want to become overly consumed, which is something that I'm going to talk about next, which is do know when to take a break. So when the market's going down, if you've decided that this is a long-term investment for you, what I typically do is I just start traveling. So when the market starts going down for an extended period of time, instead of me sitting around worrying about my portfolio, I go and do something like hike, camp, travel, something to get my mind off of sitting around paying attention to the market. So don't let it consume you. That's a really big thing. I mean, I think we've all been there where we wake up in the morning, we go to sleep looking at the market, we go to bed looking at the market. I mean, it's been like that a couple times here recently. In 2017, we saw that. You guys all know, I mean, even the new investors know that it can be quite addicting. And so any sort of addiction can be overdone, if you do things too much. Anything in excess is not always good, right? Mindset. So do be patient and don't expect quick money. So when you're expecting quick money, I think we all want to get rich. We all want to achieve our goals in life, but this is really important. Having that long-term vision of what you want to do with your wealth. There's a book out there. It's called Think and Grow Rich. And if you guys ever get a chance, by the way, I'm going to go back to this homepage now. It's called Think and Grow Rich. The idea behind it, the concept is he studied a bunch of really wealthy people, Andrew Carnegie, a few other people who are really successful. Napoleon Hill was his name. And his thing was, you're never going to achieve wealth unless you have a plan of what you're going to do with your wealth. And just retiring is not going to get you the universe to respond to your wealth desires typically. I mean, what happens to most people who get quick money? What happens to most people who hit the lottery? They end up, giving it all back, right? It's like going to the casino. So what it is you have a reason why the universe, whatever you want to call it, whatever you call it, it's up to you. Divine calling, your mission, what are you going to do to make the world a better place? Because at the end of the day, your calling, our calling, my calling is to leave the world a better place than we came in, right? So that's what the evolution process of humanity is. The people who make it worse, it never ends up well for them. So if your plan is to just retire, eat food, and then take dumps in the toilet, and then just consume and produce waste, that's not going to get you wealth. But if you say that I hope to do this for my family, I hope to do this to maybe create the most innovative new technology for getting rid of all those plastic bottles we see all over the ocean. I mean, Politics aside, it doesn't take a rocket scientist to see bottles all over the ocean and plastic waste all over and saying, gosh, that doesn't look too good. There's got to be a solution. Someone's going to come up with the solution to that, and that's going to be game changing. And you can do it in a non-dogmatic way. You can do it in a sensible way where you're like, hey, I'm just going to replace plastic bottles with something better, an alternative, or an alternative energy source. Whatever your main driving purpose is, to maybe build a house for your kids and do extra things. But having goals is really important. That's how you achieve the wealth. You got to set your mind on goals. Call it manifestation, but you can't have empty manifestations without and expect the wealth to come find you. Okay, so be working on something, be planning something, have 5-year plans, a 5-year plan, and then you just work towards that 5-year plan. You don't even need to go out 50 years. Just a 5-year plan. Say, in 5 years, this is where I'd like to be. There you go. So anyways, guys, thanks for watching Blockchain Bullz and all the new subscribers. Like I said, you can come here, crypto training videos. Thanks to everyone who's been subscribing, hitting the like button. We'll see you on the next one.